When it comes to investing your money, there's only 3 numbers you got to pay attention to. TRM. Time, return, and money. And once you understand how these 3 things work, all you got to do is plug your numbers and plug your money into the right place, and now you're going to be able to retire and build wealth in the way that you want. So let me start by talking about the T, time. So let's assume that you invest $1,000 only today and you never invest another penny. That's not what I want you to do, but I'm going to stick with that example just for this hypothetical. So you invest $1,000 today and you never invest another penny. You get a 10% annual return on your money, which has been the historical stock market average over the last 100 years. But now let's mess around with the time. Let's assume that you invest your money for 35 years. So you don't invest another penny. You let your $1,000 sit in your investment account for 35 years. That means your $1,000 is going to grow to $28,000. If you gave yourself an additional 10 years, you let your money sit there and grow for 45 years. Well, now your $1,000 is going to grow to $72,000. And if you can give yourself an additional 10 years, so now you let your money sit and grow for 55 years, now that little $1,000 would grow to $189,000. So the first thing you have to understand, if you want to make your money into something a whole lot bigger, the first fact you have to understand is time is the most valuable asset you have. The longer your money has to compound and grow, the wealthier you will become. We haven't even touched investing more money. We're talking about investing only $1,000 and that you can turn this $1,000 into 6 figures just if you give yourself enough time. And so one of the easiest solutions is to give yourself more time, except we can't go back in time and start investing 5 years ago or 10 years ago. And so the best second thing that you can do is start investing sooner rather than later because, well, you need time for your money to compound and grow. But now let's dig a little bit deeper. You can't impact and change how much time you have, but you can improve the R and the M. So let's take a look at now what happens if we change the R, the return that you get on your money. So same hypothetical, you invest $1,000 today, you never invest another penny again, but you let your money compound and grow for 45 years. If you can get an average 7% return a year, which is below the historical stock market return, that means your $1,000 after 45 years is going to grow to $21,000. Now, we already discussed in the previous example that a 10% return is going to give you $72,000. But if you can grow your money by 13% a year, this is a little bit above the average stock market return, then your $1,000 invested for 45 years would grow to $244,000. Again, this is assuming you never invest another penny after you invest $1,000 today. Now, the reason why I'm emphasizing this on the return side is because there are ways for you to get better returns on your money in the stock market. You've probably heard of people talking about risk versus return. The higher risk you take on, the higher potential returns that you can get. And this is where what you want to do as a financially savvy investor is figure out how you can get higher potential returns without really raising your risk. That's what you want to be able to do as a stock market investor, is figure out how you can get the highest returns with the lowest risk. That way you can maximize your returns while also making sure you're making money. So now we talked about the T, the time. We talked about the R, the turn. Now let's talk about the M, the money. So now let's assume again that instead of investing $1,000 today, you invest only $500 and you get the same 10% return for the next 45 years. If you do that, your $500 would grow to $36,000. Now we already know that if you invested $1,000 for 45 years at 10%, that means your money would grow to $72,000. But if you can invest $5,000 today, that means your money would be able to compound and grow to $364,000. So if you don't have time on your side, then the way that you can balance out this lack of time is by investing more money and also trying to get better returns. But if you still have time on your side, well, now you can get the benefit of time plus more money, plus the higher returns. If you enjoyed this clip and you want to continue your financial education journey, I have another video that I think you'll love. All you got to do is click that button right over there. And for those of you who want to stay up to date on the top finance and business news, you can join Market Briefs, my free financial newsletter, by clicking that button below. Thank you for watching, and I'll see you in the next one.